All right, everybody. Welcome to the next commercial real estate morning news show. And I have my friends in the house with me today, and we're going to talk all things commercial real estate. I will let them introduce themselves. So, ladies first. Go ahead, Maria.
Thanks, Amy. Looking forward to today's show. Thank you for having me. I come from a long line of roles as CIO and head of IT for real estate organizations, which include Morguard, Manulife, PwC, Regal Lifestyles, and now enjoying a lot of these discussions that we're having and how technology has evolved, and it continues to evolve and impact our industry. So looking forward to today's discussion.
All right, awesome. And David?
Hi, Amy. I'm Dave Auerbach. I'm the Chief Investment Officer of Hoya Capital. We're a REIT and real estate research platform, and we manage 2 REIT and real estate ETFs that trade on the New York Stock Exchange with a combined $140 million under management. I'm the publisher of the Daily REIT Beat newsletter, and I'm a REIT industry consultant, and always happy to join you and Maria for these exciting, insightful conversations.
They always are exciting. For sure they are. All right. Well, Deanie Taylor also will join us here soon. He said he was caught in traffic, but he will join us here in a few minutes. So I'm going to reserve the stories about that. But all right, we got to talk about it. The election's coming up in a couple of days. Everybody, it's not about placing bets on who's going to win. I think the real estate industry as a whole is kind of embracing, like, depending on who wins. Obviously they want the real estate guy to win because they feel like there's going to be a better environment going forward. And they're afraid that, I don't know. There was this story out in Reuters, and it was talking through about how if we have one more like tax hike on something else, that the whole industry would just kind of, I don't think it would collapse, but I think it would be devastating to the industry because they're already in a real estate recession. But what are y'all hearing out there about not bets on that, but how we embrace if it's one versus the other?
I can't wait to hear David's perspective on this, but all I'm going to say is that we as Canadians, and I can probably speak for many, are captivated by the election. And I'm not going to express any views because, I don't know enough to say, but I know what the media is telling us and and that's not always the truth. But certainly don't want anything to impact the industry any more negatively, right? But there's going to be some implications on this side of the border too, with either one of those candidates winning. But anyway, we're listening with bated breath, to be honest. Go ahead, David.
Pulling out your popcorn and going, watch it. All right, let's see what's going to happen in a couple of days.
I know.
That's crazy. What about you, David? What do you think?
It's more than just the presidential election. It's also the House and the Senate and some of these other races that are occurring. And regardless of who wins, it's not like I forget what day inauguration is off the top of my head, but it's not like on Wednesday, suddenly we wake up and the world of commercial real estate is completely different. Right. This is something that you're talking potentially years down the road if there's going to be any legislation or anything enacted. I take a different perspective of things, as you know, and it may be wrong. I don't really care. It's just how I view things, in that I think about the companies that I follow, that we cover, that we own in our ETFs, and the day-to-day usage of our properties. And regardless of who wins the presidency, it's not going to affect whether I go to Starbucks and get a cup of coffee or not and support a net lease REIT. It's not going to impact if I order an Amazon package using 3 REIT sectors to get the product to my doorstep. We're going to keep leading our lives and doing the things that we do in the world of commercial real estate, regardless of who's sitting in the seat. And I do think, obviously, at the corporate level or the executive level, when it comes to taxes and some of this other stuff, there might be some things that's going to be fleshed out there. but I really feel like we're making a mountain out of right now, really what's a molehill of a topic, in my opinion.
Well, tell me how you really feel, David. Just saying out loud. No, I'm just kidding. You always do. It's great. No, I feel you. No, that's true. I mean, it's a very good perspective because it's true. The president won't get anything enacted until, or won't be what is I need more coffee. Anyway, January.
Well, look, if Kamala wins and this housing allowance credit thingy comes into place for first-time home buyers, the $25,000 number, or whatever is being floated. Number one, it's not a difference maker when you look at how expensive homes are. It's not like it's going to be a game changer of, finally pulling that trigger. It's the same thing like solar, like the solar tax credits and investment. It's not like it's a difference maker of yay or nay because of how much you're laying out for that product. And thinking about us in the world of real estate in general, it's a good place to be. Because if you think about residential, we still don't have enough supply to satisfy the amount of demand that's out there, whether it's apartments, new properties, homes, single family rentals, et cetera. That again, it doesn't matter who's sitting in the seat. We're going to keep building homes. We're going to keep, building apartment properties. We're going to keep needing to go to Deanie's properties, to get ourselves checked out at the doctor's office, et cetera. That it really doesn't impact the average person's day-to-day lives whatsoever. Now, one key thing. I just pulled up a story. I was going to share it here in a little while on my LinkedIn feed. Redfin talks about mortgage rate movement just over the past month.
Yes.
Mortgage rates hit 7% on October 28th. It's the highest level since the summer, up 1 percentage point from the 18-month low they dropped in mid-September. That 1% move costs home buyers like $33,000 in purchasing power because of the offset in the movement. And again, depending on who's sitting in that chair, it's not like on January 23rd, all of a sudden, I'm enacting legislation that's moving the 30-year mortgage rate from 7% to 4%. It's still got to work itself out. There's still going to be issues regardless of what's happening there.
True.
Good to see you. It's been a while.
Yeah. There he is. He was in an Uber. Looks like you're still in the Uber. It's all right. It's all good. I take so many calls on Uber. It's awesome. Yeah. Now I agree. And I think so that $25,000 or $50,000 housing credit or whatever, it's a credit, right? That's all they can do. If they really wanted to move the needle, they should let people use that for their down payments, right? We just want the transactions to occur, right? So anything to make the transactions go. And if people don't have down payments, but then that, bargains the question, well, should they really be getting a mortgage if they don't have the money for a down payment? And is that frivolous? And, there's a whole lot of there. It's interesting to see what's going to happen. But I agree. I think, but you can't, the sentiment moves a lot of people, right? So if, say, the real estate guy gets elected versus the woman, I think people will I think that'll spur things. I don't know why. I'm not going to say who I want to be elected, but he is definitely real estate's darling. And I think they feel like he's a better candidate for what we're trying to do in real estate. Do I agree? I'm not saying, but I think that people take a kind of collective breath that we've got somebody in the office that, is our friend. I don't know.
So is it perception, Amy, is it perception that under his regime, real estate, the industry
regime is such a good word, but keep going. Yes. Mm-hmm.
Under his regime, did real estate actually flourish? Is that still the sentiment? I mean, because if you associate what his past, time and power did to the industry, we don't hear it that way. It's a little bit of a mixed bag there. But
you got to put an asterisk on that, though.
Okay.
Because if you look at what happened to the housing markets during COVID and the flippers, the free money that was out there for the companies because of interest rates being at nothing, et cetera, of course that spurred activity.
Right.
But it's because we had this pandemic, and it's not because he was sitting in the office.
Yes, with other conditions that contributed to.
Yeah, I mean, let's be honest. There was a lot of other factors out there besides, yes, he is real estate friendly. He had a real estate empire, office buildings, but the real estate portfolio that he's got today is different than what he had going into the office a few years ago. So, again, you got to kind of look at it with a different lens.
Deanie, if you want to jump into the fray, you're more than welcome, buddy. We're talking politics, sort of. You're on. I can't hear you, bud. We'll figure out the audio for Deanie. Not sure what's going on there.
Might be on mute.
Yeah, I don't think so. I think he unmuted, but not sure. We'll figure it out. Okay. Well, so I think it's, for sure. I think there's a lot. I believe that if anybody raises taxes, which I think that's what everybody's concerned about, is if a Democrat's in office, that's what's going to happen. And if Trump gets elected, that's not what's going to happen. I think that's a big portion of it, that I believe people will kind of feel relieved if one gets elected versus the other. But if Kamala gets elected, then people will bob and weave and we'll figure it out. Like, that's kind of what we do. We're real estate people. And we'll try to make the best of what we got.
How about interest rate direction though? I've heard different schools of thought in terms of interest rate direction with either candidate, right? I mean, it's because taxes is one thing, but interest rates are another.
Yeah.
I think interest rates kind of influence the industry pretty heavily.
The Fed is supposed to be,
neutral.
Yes, it's supposed to be neutral.
Is it bipartisan?
I don't know. I don't know how much the Oval Office leans on the Fed at all, or if they listen to him at all, or I'm assuming they do. I mean, the Treasury Secretary is kind of, I'm sure in their ear, but interesting. Yeah, I don't know. I don't know what the magic button is to get them to. For me, if I had a crystal ball that I was going to use that wasn't broken, I would say that it's going to be a very, very slow pullback, not as fast as they went up. I think they're going to be really super cautious about lowering rates. And I think that's just going to put pricing pressure on all the real estate. It's already dropping now. And depending on the asset class you're in, right? Office and things are trading at much lower levels than they were before. Were those levels that were COVID levels, were those actual really good prices, or were they skyrocketed and was it the true value? I don't know. It's just kind of interesting. It's an interesting time for sure. All right.
Promises, like anything else, like even Canadian politics being a smaller arena for sure, but it's do the promises actually turn into action? And sometimes I think not sometimes they course correct, don't they?
They do for sure.
Anyway.
They do for sure. There was this, and I don't know if we have folks on the do you follow Embassy REIT, David? Do you follow that REIT? No. Okay. I think they're in India, but I thought this phenomena was really interesting. So India is obviously becoming a powerhouse in itself. It's becoming one of the largest populated countries, but then apparently there's NBC REIT in India, and they're just chugging along because a lot of foreign firms are now setting up offices in India. Which I knew of, right? I mean, we've known that there's been several, but apparently there's been a slew of more and more people starting to get into India. And I was going to throw that out there. I don't have my Ankar Shahis not here, but I would bring him in. Well, maybe we'll do the story next week when Ankar can be here, but or Shagram or Sangram can be here. But it's really interesting what's happening in India. And I don't know if y'all have heard of anything.
So what is happening, Amy? Oh, sorry. Go ahead.
I was just going to say a bunch of the REITs like Equinix, Digital, Tower guys like American Tower, et cetera, they are very busy in that part of the world. India, Africa, that part of the world's like the next frontier for a lot of these companies for exponential growth. So hearing that story doesn't surprise me whatsoever. I think a lot of these global players, like a Prologis on the industrial side, you'll see them getting more active there. You have to remember that, especially thinking about the towers and data centers, a lot of those parts of India or Africa still don't have 3G or 4G technology. They don't have a cell tower. And so think about how much revenue growth opportunities there are by putting a cell tower in one of those places.
Oh, for sure. I mean, I think that's definitely for anybody who does like, I'm surprised. Well, Starlink's everywhere, right? I don't know how big their India presence as far as is happening, or any more. I don't know. I haven't really researched that, but that is the key, right? I mean, as soon as you get connectivity somewhere, then real estate blossoms because now you can build all sorts of different things. I think it's an interesting concept for sure. That's really cool. Yeah, it's interesting. So any news stories from Toronto? You're in Toronto, right?
Yeah. Oh, well, the rate decrease, right? Everybody was pretty happy, right? You heard about that. I think that's where everybody's very excited. I think that they're expecting, the downward trend to continue into Q1 too, 2025. Yeah. So I think that's a good news story.
So yours. So explain to me about Canada. So Toronto, for those who don't know, is like on fire. It's been building forever, partly because they were shut down longer than the rest of the U.S. And so now they're trying to play catch up. I think is some attribute the economic boom to that, and it could be other things. But so does you have a central bank like the U.S. does, right? So right. School me here a little bit. So do they meet? Like, do they wait to see what the U.S. does and then they follow suit, or are they doing their own thing? You'll beat into your own drum. What?
Oh, I think it's a little bit of a mix, right? Yeah. But certainly we have a pending election coming up. So the rates really, are going to influence the decision. Now we don't have this, the same. It's all the same issues, though. When you think about what's driving us is, affordability and healthcare. Affordable housing is huge, and healthcare, and immigration policies, like everything that you're discussing, kind of affects us. However, we're all, I think, waiting too on what's going to happen because the relationship, changes somewhat, right? There's certainly that influence, but yeah, I think that it's a little bit of a hybrid. U.S. is a superpower, and that's true. So I think whatever happens there is certainly going to influence our direction, right? But I do believe that we have our own issues, and I think the downward trend in the interest rates is certainly the way it should be going.
Yeah.
To fuel, I mean, a lot of the construction projects have actually been on hold because of the interest rates. So I think it's going to spur some great activity.
You're already blowing and going. You got 200 cranes in Toronto. I mean, you're going to have more.
Yeah, but there's still a lot that's been on hold. Like, when you talk about affordable housing, I mean, I think that there's a lot going on that, I think is now going to become a little bit more positive. Even some deals, at the deals side, right, too, has been influenced, right, by the interest rates, and everybody's kind of waiting. But I think it's a good news story.
What I also was talking with so we have a partner in Canada, my prop tech company does, and they were mentioning I think it's in Ontario, that they passed a law, and this might be coming to a U.S. town near you, is that every building over a certain square footage has to have cybersecurity insurance, and which I find that which is odd to me, but I get it. But in order for people to have cybersecurity insurance, they have to, people don't know what they have, right? So now you're taking a look at changing your whole real estate operation to a more of it, managing all of your inventory and all those other great things. I thought that was super interesting, but I'm surprised it's not already in New York City, or in some major financial.
Yeah, did they say it had been passed as a bylaw? Like it's actually law? Because I didn't know that it was actually passed as a law.
Yeah. Yeah, that's
for multifamily.
For any building over a certain square footage, any building has to have cybersecurity insurance.
Yeah, because insurance has been a big cyber insurance has been a big topic, right?
Yeah, for sure. Yeah.
Because sometimes, like, but now it's not a matter of if, it's a matter of when. So that probably is like when you'll be compromised. So, I think but then we talked about the premiums themselves. So yeah, I got to look into that. I didn't. Yeah.
Yeah. All right, David, any other REIT news? What's happened in the world of REITs?
I mean, we are in the middle of earnings season. This week, next week are the two busiest week for earnings. And so you're getting a lot of, commentary plus additional news from some of these companies. And I think an interesting takeaway, obviously everybody talks about the death of office, return to work, that conundrum.
Yes.
There's an article in the Journal online today. I think it'll be in the hard copy tomorrow that talks about, more and more firms putting in return to office mandates, which does benefit the landlord. Some of these companies, like there was a story that came out that SL Green, they signed a big hedge fund at New York City at 245 Park Avenue. And in a different story, SL Green talked about redoing the public plaza at 245 Park Avenue to make it more employee tenant friendly, to try to encourage more folks to come back. And so I think you're noticing a very interesting dynamic between landlord and tenant working together to try to figure out the best steps to get people to come back to the office. Frankly, the landlord doesn't really care because they're the one leasing out all the space, right? They're basically, some of these guys, I think SL Green's occupancy is like 93%, 92%. Like they're pretty, full across a lot of their properties. It's on the tenant to get their employees to come back to the office. But they're saying to the landlord, hey, can you do this, this, and this? And can you add these additional amenities? We feel that this will be the difference maker to get people back to the office. So something to follow as we go into 25 with more and more people going back to work, especially, using January 1 as the magic date here. But I'm sure we're going to be seeing more press when it comes to that. So that's just one interesting story that's out there.
Interesting. So talk a little bit about the daily repeat and all the things that you produce LinkedIn articles every day, right? You're pushing stuff out every day.
Yeah, I have 3 tabs that are basically open every single day. It would be LinkedIn, it would be Twitter, it would be our research message board. But I try, anytime a story hits, I try to put the story out there in some digestible fashion. The repeat basically levels when I say the news playing field. So it doesn't matter if you're government of Singapore, Cohen and Steers, the largest institutional money managers that are out there. Retail investors, everyday investors have the same right to know the news that's coming out at the same time as those big managers do. And if I'm able to bring some of that time valuable information to them, then they're more well informed, especially a financial advisor. As when I talk to advisors, because of my relationships with REIT management teams, I like to think that these companies would like to spend more time engaging with financial advisors, the voice to the end investor, the people that hold their company stock. Because as I say to like an Edward Jones advisor, as an example, imagine if I could connect you to this management team, you could ask them all the questions that you want to know about their company. And granted, there's some stuff they won't tell you because it's privileged information or confidential. But if they can tell it to you, they will engage with you. And then think about how educated and worldly you come across to your clients and prospects when they're sitting across the table from you. You could say, I just talked to the CEO of this company or the investor relations. Here's what I've learned, and here's why this benefits you or matters to you. We're always out there trying to educate and learn more. And I think that's one of the benefits of the REIT industry is that we're full of transparency. We tell the story, the public side at least. The public REITs are very transparent, telling you the news, the cap rates, all the fun information that's out there. And I'm just trying to bring that information because what's new to you 5 minutes from now could be new to that person 10 minutes from now, 2 weeks from now. Everybody
Right.
processes news differently. And I'm just trying, whether it's too much or too little, I'm just trying to bombard the world with all the REIT news that's happening.
Which is super awesome, which is great. And that's why we love you on the show.
Thank you.
So awesome for you here. Hey, Emil, how are you, buddy?
Hi, Amy. It's been a while.
It's been a while.
I haven't attended.
Yeah.
After I came back from US, I was sick a little bit and busy. Then my daughter was sick for 2 weeks
Oh no, that's crazy.
with this all of the stuff and immunological problems. But now I'm running. I'm firing on all cylinders, I hope. So that's how I am. And sorry for being late, but I've noticed.
You're fine. So Emil is you're in Warsaw, right? Warsaw, Poland.
Yeah, Warsaw. We had a deep autumn period now, so no sunny weather, only fog.
Yeah.
Raining, windy.
So introduce yourself to the group. So you're you do housing developer, right?
Housing and commercial, yeah.
Housing and commercial, yeah.
Yeah. But commercial projects stacked. There are no transactions except one we are running with.
Yeah.
But all of our forces, my forces, are focused on residential. There is a, let's say, huge demand for residential with the very little supply of the new ones. So that's why we are working on it.
Is it still the case? So the last we talked, the Ukraine war, there was a lot of refugees coming from Ukraine, and they were going into Romania and Poland, right? And that was fueling some of the need for housing. Is that still the case? What's
Yes. The demand. There are, let's say, 70% of demand is origin one, the Polish one, and the rest there are individual investor, and not only individual investors from Ukraine and Belarus also.
Yeah. Okay. Interesting. So is there still concern? We were talking politics earlier, so I'll go there. Is there still concern in the Eastern European side, or that the Ukraine war kind of spreads further than it is? I mean,
no, we are not thinking. We are not focusing on this. I think it's let's say maybe not impossible, but I don't think so. It can happen, and that it can go further into the central location. I think now all of the war activities are on the eastern border of Ukraine, so next to Russia, far away from Poland, from Hungary, from Romania. So we are running the businesses normally.
Okay.
I have a question.
Yeah.
Emil, you talked about supply, demand, what you're doing over there. So, talk to me about mortgage rates. What is the typical mortgage rate? Is it like ours where we have a 15-year mortgage and a 30-year mortgage rate? What is the mortgage situation like over there? Because we shared a story here that a 30-year mortgage is over 7%. It's gone up a full percentage point in the past month, which has cost home buyers $33,000 on average.
30 years mortgage is the rate is like 7.5, but there are let's see incentives, a lot of incentives from the government. We had a votes a year ago. The new government came with let's say printed cash, and there are money for the people who want to buy their first residential apartment, house, both of them. So for the first purchase, there is let's say 3.5 or around 3.5%.
Oh,
So
interesting. So they
it is the thing which is stimulating this demand. So both Russians and incentives from the government.
So, Amy, there you go. There's a perfect example right there.
Yeah.
That the government could say, okay, you're a true first-time home buyer and you qualify. Instead of you paying a 7% 30-year mortgage rate, we'll give you a 4% mortgage rate or whatever it is. And then it's based off of some SOFR, LIBOR, whatever it is.
Mm-hmm.
But maybe that's a way to spur more affordable home ownership for some of these folks.
Yeah.
The problem is that there's just not enough affordable supply domestically to justify it.
Yeah, but I think if you get buyers, the supply will find it, right? I mean, if there's buyers chomping at the bit and there's demand, then everybody will switch to affordable. They'll switch into building these homes because that's where the money is. I think
Right.
I think if you create the demand, the supply will find it.
But with this, let's say, huge demand, the prices in the central location are skyrocketing. So, okay, we have, let's say, nice rates for the people who wants to purchase their first house, first apartment, but the prices are unaffordable. I know I bought one of my apartments. I bought 3 years ago, 4 years ago, and when I'm comparing the prices, my eyes are much more bigger than you can see now, and it's like I'm just spinning with the head like this, and what's going on? I'm not accepting such a thing, but I'm, let's say, I'm going with the flow as a developer, and I'm trying to use it and catch this flow to sell as much as possible in the high price as possible.
Yeah, no, I think so. It's obviously the whole inflationary environment was a worldwide phenomenon, especially in real estate. I don't think it was just in the U.S., right? Every home price, even in our local economy, Austin was a weird anomaly, but it grew significantly. So yes, I think everybody's kind of, so depending on where the prices kind of bottom out to or fall out to, whatever that is. I don't know what the bottom is. The bottom could be better than what it was in 2015. Who knows? But it's definitely an interesting time for sure. Well, we're going to wrap up early today because I've not been feeling well for the last whatever, and I'm here, but because the show must go on. But I think I'm going to bow out soon. So let's do outros for everybody. You can start, Maria. Ladies first again.
Yeah, I wait with bated breath, as we all do, on the outcome of your election, and wish you all well either way. And hope that the fallout for our industry is more positive than we've been talking about. Let's say, I hope that things do change regardless of who's in power, to better, anyone that's looking for, real estate, like whether you're a new resident or a new single family home buyer, or the commercial industry as a whole. So I kind of look forward to the improvement overall.
Yes, exactly. Yeah. Next week we'll be on, and it'll be election day. So we're going to be talking about something else because that's all everybody.
How can we? How can we, Amy?
Okay. All right. Fine. All right. We'll talk about it. All right. David, go ahead. Parting thoughts.
Buy REITs.
Buy REITs.
No matter what, buy REITs.
Polish government is working on REITs. Because we haven't had before REITs, and the government is working on this. In the upcoming year, we're supposed to have ones, right? REITs. So it will gather new investors on the market. So it will be better times, I hope.
Yeah. Well, great. Well, thanks for joining us. Even though you're late, Emil, we always love having you.
Sorry for being late.
Good. That's all good. All right. Well, we'll see y'all next week.
Take care, Amy. Take care.
Thank you, Amy.
Yes, take care.
All right.
Bye-bye.
Bye. Thank you. See you.
All right. We'll see you.
Bye.
Bye. And that's been another Commercial Real Estate Morning News Show. I'm Amy Palvido. I'm the chair of the U.S. PropTech Council. And we have this show every week on Tuesdays at 9 a.m. Central, where I bring in real estate experts from around the world. And we talk through all things commercial real estate. If you have any sort of topics that you would like for us to cover, or any sort of guests that would like to come on our show, please reach out to us at proptechcouncil.com. Love to have you. And y'all have a blessed week. We know it's 7 days and counting. And in the U.S. elections, they're going to be here. And it's a big topic. And it does impact the real estate industry. So we will talk about it next week. But y'all have a blessed week. We'll talk to you soon.